Awesome. Hey everyone, we're back with another live session. And this time we're going to be talking about a lot about Bitcoin. And we have a really special guest today, which is Murad. And I've been following him for a while now. He's very thoughtful with a lot of Bitcoin stuff he analyzes. And correct me if I'm wrong, Murad, but you classify yourself as a Bitcoin maximalist. And I love that. I love some of your tweets and your analysis. So I'm really excited to jump into this idea that cryptocurrency's biggest use case is speculation. But before we even get into all that, I really want to take a step back and just spend a couple minutes on you. I'm just curious to hear sort of how you got into Bitcoin first and what's your story of how you came into the space.
Mm, so during first of all, thank you for having me. It's a pleasure to be here. Um, how I got into crypto. So during my time in college, I did a semester abroad in China, and that was kind of around the previous peak, so late 2013, early 2014. And the liquidity on exchanges in China wasn't so great back then yet. So some of my foreign friends who were also like either studying in China or working in China, they were literally bringing physical Bitcoin on their laptops into the country and selling it locally at a small premium.
Wow.
And sort of I got introduced to a lot of Bitcoiners, both foreign and Chinese, attended a couple of meetups, sort of been paying attention to Bitcoin ever since. Um, kind of was to Ethereum relatively early, maybe mid 2016, and kind of 2016 onwards got particularly more and more active and more involved in various things. And then so here we are right now, launching a crypto hedge fund in May.
Oh, congrats.
Um,
That's awesome.
Thank you. And so yeah, so that should be exciting, but essentially that's my sort of path.
Awesome. And I know that you share a passion for Bitcoin, and I didn't realize that you were part of the Ethereum community as well. I'd love to jump into that a little bit later. But I want to jump into the claim that you made and the whole point of this conversation. And I'll quickly share my screen so that others can see what tweet I'm talking about, so that it sets the context for the rest of this. Um, so there was a tweet recently that you made where you said, there's far few people who care about decentralized, sovereign, uninflatable currency for its own sake than you'd think. Cryptocurrency's biggest use case is speculation. This is a fact. For better or worse, speculation and human greed are your biggest hope. And then you went on to say 99% of people, be they rich or poor, don't care about decentralization, don't care about self sovereignty, don't care about privacy, don't care about sound money, don't care about Austrian economics, they don't care about uncensorable payments or libertarian ancap or cypherpunk ideals. That's a lot to unpack, but really it comes back to the idea that like the biggest reason you made a claim that the biggest reason a lot of people are into crypto is because they want to make money for speculative reasons. So can you dive into what sparked this tweet and why you believe this?
Yeah, for sure. I think it's important to note that any cryptocurrency, and frankly, in my view, any newly emerging form of money, it will evolve in stages. And I think the stage where we are right now, whether we like it or not, it almost necessarily needs to be bootstrapped by sort of these speculative animal spirits, so to speak. And I have something pinned on my Twitter, which is this picture, which kind of shows this progression. And this is kind of a famous meme in the Bitcoin community, but essentially a lot of people, a lot of Bitcoiners, um, Vijay Boyapati, Dan Held, who you had on the show, Nick Szabo talked about this indirectly, but they believe that essentially a money that isn't supported by the government, but rather arises naturally in the free market, it needs to follow through these maturity cycles, starting from a collectible, then a store of value, then a medium of exchange, and then it matures into a fully fledged money, including a unit of account and standard of deferred payment, etc. But for the time being, I think it's everybody would agree with me that we're still between stages 1 and 2, which are we are still between a collectible and a store of value. I mean, Bitcoin is a better store of value today than it was, say, 7 or 8 years ago, but it's still an imperfect one. Though, as it becomes bigger, its quality as a store of value product improves, right? So these cycles, they also map to sort of the level of speculation. Right now, where it's almost can be considered a purely speculative bet. I think if it gets 10, 15 times bigger from here, people will treat it more as an actual investment. And then if it gets 10 times bigger than that, people will actually consider it a savings vehicle. And then if it gets 10 times bigger than that, people will actually consider it like a very low risk, very sort of reliable way to park your wealth, etc. And so it's on this curve. We're still extremely early. This is like on a theoretical level. On a practical level, I think nobody would argue with me that one of the biggest, if not the biggest use cases of both Bitcoin, the settlement network, and Bitcoin, the currency unit, is essentially just trading on like derivatives and like Bitcoin derivatives. It's actually very ironic and very meta, but the number one use case of permissionless money is permissionless gambling on its own price, which is like a circle within a circle within a circle. But essentially, to put it mildly, BitMEX is probably the biggest use case of Bitcoin at the moment. Now, we and a lot of evangelists hope that some years from now, hopefully sooner than later, but it will be actually used for many millions, hundreds of millions of people around the world to park their wealth and pay for things and conduct commerce. But it's not ready for most of these things yet, especially the latter. Simply speaking, Bitcoin needs to be bigger before it's going to be useful for most things that people want it to be useful for, and we aren't there yet. And if we are ever going to get there, we want people to bet on Bitcoin. We want people to gamble on Bitcoin. So the fact that it's mostly used for speculation today, I think is actually desirable.
So when you say bigger, do you mean just in the hands of more people? Like, how do you define bigger? The market cap?
Well, bigger, you want the price to be higher, you want the market capitalization to be higher, you want the volumes to be bigger, you want the liquidity to be bigger. And even this isn't just because like all of us want to get richer. It's also because if you just temporarily isolate as a store of value, Bitcoin is going, and as a medium of exchange, frankly, Bitcoin is going to be better at doing those things, fulfilling those needs, if it's bigger, because the bigger it is, the more stable it's going to be. And that's one. Two, the bigger it is, the more liquid it's going to be. And three, and which is probably the most important thing, right now, the incentives to spend Bitcoin, there's a high disincentive to spend Bitcoin because nobody wants to be the famous pizza guy. A lot of people have spent Bitcoin in 2011, 2012 on frivolous things. And right now, as I'm sure you're aware, they regret it. Nobody wants to have that regret because Bitcoin arguably still has 300, 400, if not higher, X to go from here. And so right now, I think, I genuinely believe that the most rational thing to do is simply to hold it, and just not touch it. Just buy it, hold it, and that's it. That's all you can do.
So a lot of people would argue that you can't have a store of value before the token or the coin has any kind of utility, meaning like it has to be a medium of exchange or unit of account before it can be a store of value, because the argument here is that like for an asset to be intrinsically valuable, it also needs to be desirable, and for it to be desirable, it has to serve some utility. And so what do you think about that argument that like you can't have a store of value without a medium of exchange first?
I disagree, and I think that it's actually the other way around. I think something needs to be valuable, ideally highly so, before many people around the world are actually going to use it in commerce. It doesn't map perfectly, but like same with gold. It was used as jewelry for a long time. It was also used as dowry. So people would give it to like during weddings and stuff and pass it from generation to generation and simply wear it on their necks for millennia before it was ever used like in business or to pay for things in a day-to-day manner. Now, technically, a store of value and a medium of exchange are inextricably linked, and money is both. But I think that it's like these wave cycles, and kind of one wave comes before the other. Yeah. And there's been a lot of writing in the Bitcoin space and in the Austrian Econ space about how the store of value, or what other people call the reservation demand, hodling is essentially the same thing as reservation demand. Essentially, something needs to be very, very desirable before it's going to be used in business. And the reason I say this is Bitcoin today is not very good. Is not a very good unit of account or a medium of exchange.
Yeah.
And it's not ready yet. It's not mature yet. And the reasons for this aren't only technological, but also simply monetary. People want their day-to-day cash, i.e., their day-to-day medium of exchange, to be very stable day-to-day and reliable and liquid. And more importantly, they want it to be more globally recognizable and locally recognizable. And we're not there yet. And that's the core of my argument. For us to get there, we want it to be bigger. And for it to get bigger, we want people to sort of gamble on it, gamble with it, gamble around it, etc. And when I say this, we need to understand that technically, investment and speculation are one and the same.
Yeah.
No matter what you do, even even breathing or walking on the street are technically an act of investment, an act of speculation. And so there's just like different sort of shades to it, right? But essentially, I like to kind of semi-jokingly say that Bitcoin today is essentially digital jewelry. And we're still some ways away before it becomes quote unquote cash.
But like, I guess like when you compare you made the gold analogy and you said and the jewelry analogy, but I would argue that, do you think gold was a good store of value before it became jewelry? Like, wasn't it only a good store of value because a lot of people prized it and found it desirable as jewelry and some kind of precious metal before it was considered a valuable store of value?
So no, I don't think so. I think it's the reason gold eventually became the chosen money around the world. And it's important to note that this happened sort of independently in on different continents. You saw the same effect, often in separate civilizations that never even connected before. And the reason this happened is the following, and that's kind of the main reason I think Bitcoin is valuable in the first place, is because all the other objects in the physical or on Earth, they are very easy to inflate. So if anything is used as money, people can come and they can sort of print more. And kind of similar things happen in Africa. Many African tribes used certain kinds of glass beads as money, but the Europeans who had the technology to create glass beads easily, which Africans did not have, they noticed something like this, went back to Europe, produced a lot of glass beads because they were more industrialized, came back and essentially slowly. The reason gold won, it's hard to, and this being very hard to produce, essentially over thousands of years made it desirable to hold because your enemy can't print more. Your other empires can't print more. It's roughly equally difficult for all people of all kinds to find more units of it. And if you look at the supply curve or monetary policy, you can think about it, of Bitcoin, it's even stricter than that of gold, which is why a lot of Bitcoiners believe that it will eventually sort of beat gold and absorb half, if not more, of all the value that sits inside gold. We believe that will flow to Bitcoin in the next couple of decades.
Interesting. So you're making the case that gold, the reason gold became a good store of value is because of its monetary policy, and that is analogous to Bitcoin in the sense that no one can inflate it. It's equal. It's more fair. It's more just.
There's a lot of debate in the sort of the monetary econ community whether like gold was jewelry and that's why it became money, or like gold was valuable because it was scarce because it's monetary policy, and that's why people started using it as jewelry. And I think there's definitely a feedback loop there where both of the forces are at play, but I think the scarcity factor is bigger. And so yes, I think that here's the thing, like as economies around the world grew, we became better at producing everything, right? And
Absolutely.
so the supply of everything was growing rapidly, but essentially without even people thinking about it. And it wasn't a centrally planned process. It was very emergent. It was very decentralized. Um, the supply of everything grew, including gold, but the rate at which all things grew, gold was the slowest. And so when monetary instruments compete, uh, a lot of economists believe that it is precisely the one that is growing the slowest that becomes the most attractive to hold as your it becomes the most desirable because nobody can like come in and just like hyperinflate your wealth. So
Yeah.
people naturally, game theoretically, converge to that thing because like assume that all the villages and all the people like they distrust each other, especially like the different villages, like especially people outside of their own families. So they need to converge on something which they both want and which they both want to hoard and use in business and sort of exchange. And so they naturally converge on something that Mother Earth essentially produces at the scarcest rate.
Okay. So then would you say that gold followed the Gresham's law where there's like this is you know the law, right? Like where people will drive out the bad currencies and hold on to the good currency. Do you think the same thing is gonna are you arguing that's what happened to gold because it was like the purest form of some kind of digital scarce currency? People held on to it, and then the bad currency or the inflatable currency kind of was driven out
Yeah.
or
So,
value.
so actually, it like well, there's a couple of things here. First of all, Gresham's law technically only applies when like a government or a central party like is holding an artificial peg. But there is something which is the opposite of Gresham's law, which people call Thayer's law, and that's essentially when the strong one drives out the weak. But to answer your question, yes, I do think that essentially gold outcompeted everything else, and it weeded out all the other weaker forms of money. And if you look at the year 1000 until the year 1880 or so, for that one millennia, the rate, like the tradable ratio between gold and silver, was relatively flat. Um, I I forget what it was, but it was something like 7 to 11 ounces of silver for 1 ounce of gold.
Yeah.
And the reason for that was because gold it has very high value density, right? And so it wasn't very useful when you're going to like the marketplace to like buy some vegetables or whatever. It wasn't very useful. So gold always existed as something which it like this. It is essentially like the smaller notes. So if gold were like the $100 notes, then the silver was used for more sort of the day-to-day trivial things, so to speak, right? And you can think of those things as kind of two different ledgers or even two different blockchains, and they coexisted at this one same uh, value ratio, which sort of persisted for a long time. But then something happened when then paper money became common. Now, that wasn't the paper money of today, which isn't backed by anything at all, but it was the paper money that was backed by gold. And so once you had the paper money, you didn't need to carry sort of large chunks of gold anymore. You
Yeah.
could issue notes of paper backed by any amount of gold and any weight of gold, and essentially that uh, caused silver to lose its monetary premium. And if you look at today, um, after all that time, you can see how the value of the two metals diverged, and essentially silver completely lost its moneyness and monetary premium.
Yeah.
And today, the total market cap, quote unquote, of gold is somewhere between 7 and 8 while all the value of existing silver is only 50 billion, which is nothing, which is like 160 times difference. So we can see essentially silver completely lost its monetary power.
Yeah. And so, how do we measure whether gold? Okay, so if we agree that, let's say we agree that store of value needs to happen before it can become a good medium of exchange or unit of account. Um, how are you measuring whether Bitcoin is becoming a good store of value or not?
Um, I think so. I have a very good friend on Twitter. His name, he goes by because he worked in accounting in New York for 3 or 4 years before going into crypto, he has a very interesting and a very unique and a very special way of looking at these things. And essentially, we sort of need to consider what these things are. All money is a form of a ledger. You can even consider that gold is also a physical ledger that's distributed around the world, right? And essentially, I think what's going to happen in the next 5 or 6 years is you will have this convergence to these store of value candidates. I do think that Bitcoin is going to take 70 or 80 or even 85% of that market, but I do think a couple of smaller ones will exist as well, at least for the time being.
Yeah.
But essentially, they are in fierce competition, and there's a lot of debate whether it's a winner take all or a winner take most market. I think the consensus view right now that the more time will pass, the more fiercely winner take all it will become. But of course, it will take some time to fully unfold. But essentially, the way I think about it is you have to approach it from a human level. If these things are ledgers and they're performing these certain monetary and accounting functions for us, then this is something I call the anxiety reduction theory of money. So essentially, the blockchains or the store of value candidates that make you sleep the best and give you the least anxiety and make you the least worried are going to win. So let's put it this way. You have, just for the sake of the argument, you have $10,000. That's all your wealth. And you have to place it in one of the blockchains today before you go to sleep or before you go on vacation with no electricity, right? Which chain are you going to place it on?
I mean, I think you say Bitcoin today.
Right. And I think it comes down to, in my mind, security. It comes down to the credibility of monetary policy. It comes down certainly to the quality of developers because they're essentially the guardians of the protocol. It comes down to the history of the protocol and how certain controversial sort of changes and moments were treated by both the community and by the developers. It certainly comes down to culture, and I think a lot of people appreciate Bitcoin's very conservative approach to things. But essentially, those are the 5-6 most important criteria. And it also comes down to governance. All these blockchains have different ways that their communities rule over the system. Yeah. And I think certain ways of doing that are much more preferable.
Excuse me, is this yours?
Yes, sir. Just give me a sec. Yeah. Just no, I'm not using it. Yeah.
Thank you so much. Sorry for disturbing.
No, it's fine.
Quick pause. 1 sec.
I didn't want to.
It's all good. Yeah, sorry. But yeah, essentially, like those are the 5 or 6 main criteria I look. I wanted to get back to a tweet recently that Bitcoin is only a store of value, and like while Ethereum can do all these other things, so Ethereum is much more exciting, and I think like I'm paraphrasing here, but like you tweeted something along those lines, right? Yeah. And what I would say here is that is true if you think about these things as a technologist, as an engineer, as a builder.
Yeah.
Which I believe is like roughly your background. But essentially, if you are like a startup person or a developer, of course, when you look at Ethereum, you see infinite possibility. And when you look at Bitcoin, you see restriction and you see limitation. And I will be the first to admit that is precisely correct. However, when you are a monetary economist, or when you are looking at it more from a monetary dynamics and from the financial and investment point of view, then you could argue that these artificial restrictions and these extreme conservatism and actual lack of programmability in certain ways, it's a trade-off, but this trade-off makes it better as digital gold, which you want to be kind of slow and conservative and extremely reliable, even though you can build certain dApps on it, but it makes it very good money.
I
And
absolutely actually agree with you here.
so here's the thing, right? Like the last point I will say is that yes, you can build a lot more with Ethereum, but the total addressable market for money is in the it's $100 trillion in today's terms or more.
Yeah.
While dApps, they're probably going to all the successful dApps of the future added up are probably going to be smaller than 100 trillion. And so yes, even if Bitcoin can only do one thing, that one thing that it's doing is like the second or the third biggest market in the world. So that one thing is more than enough, I would argue.
I don't disagree with you on that for sure. I think like if for a currency that's trying to be digital money and a sound money, I agree that Bitcoin's approach of governance and everything it's doing, they're doing everything the right way. The narrative that it builds for itself, the approach to slowness and conservativeness is definitely the right way to go about it. I just so I'm not disagreeing with you on that for sure. I do think that I also agree with you that in terms of value, like yes, money is going to be the biggest $100 trillion, whatever $1 trillion valuation thing. So it's the biggest thing you can bet your money on. But at the same time, I also don't discount the fact that there will be apps that need to get built, and I don't think they should be built on Ethereum. On Bitcoin. I think we do still need other, as a technologist, it'd be nice to have other ways to build those kinds of applications as well. So yeah, I definitely don't disagree with you here. I just think that I'm not saying Ethereum is the right solution for that, but I think we should at least explore those possibilities and not completely dismiss them as there's no point.
Yeah, I definitely agree. But I think that when you sort of start thinking about these two sort of markets and two topics and how they interconnect, then because decentralization itself is very expensive.
Yeah.
Because like both gold as well as things like AWS, they don't need to defend against 51% attacks and potentially being disrupted in any way. They don't need to be perfectly uncensorable, etc. And that's why we all know that decentralization is expensive for a variety of reasons.
Absolutely.
And because of this, for systems like Ethereum and other smart contract platforms, for them to be secure, they need to be valuable. And a lot of people in the industry increasingly believe that for these underlying tokens of the smart contract platforms, for them to be valuable, they need to be a store of value first. So whether Ethereum likes it or not, it's competing against Bitcoin at being a currency, whether it wants to or not. Because if it's not going to be a currency or a store of value at all, then the market capitalization will eventually fall, and then the system isn't going to be secure. So the dApps that are going to be built on top of these systems aren't going to be secure, and so nobody's going to build on an insecure system. And so essentially, I believe that all tokens, whether they want to or not, they are competing for that monetary premium, and it's essentially this vicious battle for survival.
Why do you, just for audience who's maybe like a little bit unfamiliar with this, like why do you fundamentally believe the tokens, why do you believe that if the tokens don't have as much value that they won't be as secure?
Because, well, let's not even before we delve into like future proof of stake constructions, just the way Ethereum is constructed today with proof of work, for the system to have a high hash rate, the miners need to dedicate electricity and machinery to protect and defend the system. And if 1 unit of ether isn't going to be worth a certain amount, then there wouldn't be any incentive and motivation for the miners to mine the chain. And if there aren't a lot of miners mining the chain, then the chain will be easy and inexpensive to disrupt in various ways. And if that is going to be the case, then the engineers who are going to be selecting between which system they should build on top of, they're going to neglect the ones that aren't secure.
So I guess like then it fundamentally comes down to the question of like, does an app need that level of security? Like if you're building a social app or some kind of app that's not trying to be sound money, do you need that level of decentralization and security on the data layer?
I think you definitely do not. And that's why I think that blockchains really are good for a much fewer number of things that people like to believe.
Yeah.
And we saw in the last couple of years the explosion of blockchain for this and blockchain for that, but I think it's becoming abundantly clear that there's only a certain very narrow niche of things. I think the number of things is probably less than 5 or 4 even, which you really, really need that level of hyper decentralization for. Now, this is going to be a little bit controversial, but I'm still not sold on the idea of dApps at all. I mean, and even if they are going to be a thing, I think we're just so extremely early for them. At best, they're like 6 years away, I think.
Yeah,
And
I don't think we
yeah,
even
so
know the definition of a dApp. Like
yeah, exactly. Because like just we started with my tweet where I said like people don't care about these things. So people don't care about privacy or decentralization all that much for most things. And so I think like money is an exception where because some people have experienced getting their money frozen or getting their transactions stopped, and most importantly, having government print a lot of money and currency being inflated. I think like money is valuable enough. It passes that threshold where people are willing to use what essentially is a very slow and clunky system for to achieve sort of these self-sovereign effects. But for dApps, I can't come up with more than 1 or 2 examples of things that really need to be that decentralized. Maybe prediction markets, maybe certain derivative and credit things, but really sort of the list stops there. And there really aren't that many more things, you know?
yeah, I think like I'm in general agreement there. And I want to jump into so like I'm definitely long Bitcoin. I 100% agree that Bitcoin is definitely I think it's doing the best job out of any cryptocurrency as serving as sound money today at least. And so it has a lot going for it. But I'm curious to hear for someone who like describes himself as Bitcoin maximalist, like what do you think are the biggest risks for Bitcoin in the long run, if any?
I think um, there really aren't that many. I like genuinely my view is that Bitcoin will continue to be dominant, at least for the next decade, and within the crypto space. I think the question that I actually struggle with more is whether Bitcoin is going to take 95% of this space, or if it's only going to take like 75% or 70% of this space. Because depending on whether the answer is A or B, like the investment opportunities and the risk reward in making other investments in other blockchains changes drastically.
Yeah.
And I think like that, like I genuinely think that like the biggest question in the space right now in the minds of most investors and participants is whether it's winner take all or winner take most. And there's like more than 20 arguments for each side, but essentially like that's like the biggest question right now on my mind.
Interesting. And that's not even a big risk. 75 versus 95. They're still pretty all there. That's like all good scenarios. I want to go into a tweet that I saw a while back that you said, where you were kind of talking about how we haven't even bottomed out yet, and you were making the claim that expected to go even lower before we reach a bull market, and you predicted a bull market not happening until a few years out. Do you still fundamentally believe that, or have you changed your viewpoint on that at all?
Yeah, so I tweeted that in early February, I believe. I think there's been a lot of happenings since, obviously. I would say right now, I am 75% certain that we saw the lowest price already and it's behind us.
Oh, wow. That's a large claim. And what made you change your
I
view?
think I think this is the way I put it a couple of days ago. I think The bad news is that the bottom is in, but the good news is that we still have a couple of months until sort of the real bull market begins.
Yeah.
And I think sort of this middle of 2019 is a good way to start leaning into the market regardless in the grand scheme of things, because we have a very major 4-year bull run ahead of us. And 2019 is definitely the time to be investing. I'm pretty confident to say that.
That's awesome. I had one more question. Okay, so like, what are the most exciting things that you're looking forward to in the Bitcoin community? I know that things typically go slower and for the better, because you're trying to be conservative and trying to protect the protocol from centralization of any sorts. But like, what do you think are the most exciting things that the community can look forward to in the future of Bitcoin? Is it mostly speculation still at this point, or are there technological things that we should be looking forward towards?
No, I think there's a lot of interesting technological things happening in Bitcoin. The Lightning Network in itself is like a whole new universe and is exploding sort of wildly. I can barely keep up with it myself. And I dedicate at least a couple of hours every day to trying to sort of keep up with some of the latest sort of GitHub commits and the engineering constructions that these guys concoct. But yeah, Lightning, Taproot, Grapefruit, Mast, Schnorr. There's a lot of interesting things coming in the next couple of years. But that's on the tech side. I think simply price going up is like super important. It's kind of popular to say in San Francisco and Silicon Valley circles that, oh, like I don't care about price, like price doesn't matter.
Yeah.
But really, if you study like monetary economics and how these systems emerge, then price is actually extremely important. And we want price to like steadily be climbing, because an increasing price makes this a good product. And so like it's actually super important. And
like,
it's also like in itself like a marketing force.
yeah, and so like, I'm just gonna be honest, like, is that why a lot of the Bitcoin community is are very much evangelists in terms of like promoting the narrative and making sure that people still believe in it? Is that part of the reason why you're trying to keep it going?
There's two reasons. There's a selfish reason of people wanting to get rich.
Yeah.
And then there is also the more sort of quote unquote nobler reason, because people think that the world will be better when the currency cannot be inflated. People think that there will be less debt and less consumerism, and there will be less war, and there will be more freedom. And I think sort of those two are the biggest driving forces. But I think most Bitcoin evangelists are driven by both forces simultaneously.
That's a good answer. And there's a good audience question. I'll start opening it up to audience questions. One of them said, "What do you mean by cryptocurrencies are less about technology and more about people?"
A lot of people, including my friend Hasu, who is pretty popular on Twitter, he has been putting forward this idea that really cryptocurrencies are social contracts.
Yeah.
And the different blockchain is a different culture, essentially. So Bitcoin is like very conservative, very slow, kind of aggressive, to an outsider, almost toxic, very defensive, very sort of suspicious of everything, questioning everything, kind of aggressive. And then Ethereum sort of a little bit more liberal, a little bit more progressive. They are sort of less religious about their monetary policy. They're willing to take more technological risks, willing to iterate a bit faster. And there are hybrids. There are different kinds of different blockchains. You know, they have their own communities, and that's one reason here. Two, I think that statement underlines the importance of the quality of engineers, particularly protocol engineers, like on the low level core development of the protocols. Their pedigrees, at the risk of sounding superficial, the quality of these engineers really matters a lot, because this is software-based money. So the level of intellectual rigor and programming skill of these people is really important for us people who want to store our wealth in these systems. And last but not least, I think the zeal and the religiosity of the community is super important, because you can really look at blockchains as religions. They are cults essentially, and
I 100%.
you want the average cult member to be running around the street getting everybody else signed up, and that's very good for the price and very good for adoption. And so you want essentially the average member to be as passionate as possible.
So,
and I can go on and on, but essentially there's a lot of human, and the fourth reason is something I already mentioned earlier, is how it's all about anxiety reduction, because the very purpose of money is to make sure your wealth travels into the future safely. And like you want the blockchain to be offering very strong assurances and very strong guarantees, and making you like as least stressed as possible. But there's a lot of these like sort of human factors that you can talk about, and that's why I concluded that you have to be thinking about these things from like a psychoanalytic point of view almost.
yeah, and I think like I agree with you that blockchains and crypto is basically like religion. And if you agree with that, wouldn't you agree then that there's going to be multiple blockchains? Because like no one can really, in human history, there's never been a single religion. Everyone has fundamentally different values and different things they believe in. And so that's the reason you're seeing, like, for example, even Bitcoin fork out into its own subchains. And so don't you think in the long run we're just going to end up with many chains if that's the case, if it's more like a religion?
If you want my complete honest opinion,
Yeah.
I think there's going to be three or four there's going to be three or four juicy chains, so to speak.
Okay. So then that's where you say like Bitcoin, you still believe Bitcoin will be the most dominant one still, but you think there's going to be other ones that can still be as important.
Like very roughly speaking, I think it's going to be like 70, 28, 3 or whatever. You know what I mean?
Yeah. Interesting. I can see that point of view. And I can definitely agree with that. And so in the short run, would you say the best thing for people who fundamentally want to drive this industry forward or Bitcoin forward is to just continue to do you believe that human greed is going to be like the best, our biggest hope right now to drive this technology and the price up?
Yes, and that's a good thing, because what people are increasingly around the world going to do is they're going to just in the palms of their hands, they're metaphorically speaking, they're going to hold some fiat money, and they're also going to hold some bitcoins. And then they're going to more and more people and more frequently are going to start asking themselves, which one do I actually like more, and which one helps me live my life better? And the bigger Bitcoin gets, the better it's going to do most of the things that fiat already does. And eventually, I think it's going to suck up a lot of that value. So that weight is going to go in cryptocurrency's favor. And so yes, I wouldn't even call it greed. I would call it self-interest, and I would call it self-preservation, because people want to get their salaries or they want to get their inheritance and they want to place it in somewhere where it's going to be safe. So that desire for safety and that desire for peace is really the driver of human of this investment class.
Do you think that like if people are just going to be hoarding it and trying to hoard it because it's deflationary and they know they have this intrinsic motivation to hoard it, right? They believe the price will continue to go up. Do you think that will prevent it from becoming a good medium of exchange, or no?
For the time being, yes, but eventually no, because when all is said and done, if Bitcoin becomes one of the dominant or the dominant money of the world, it's only going to grow in purchasing power roughly with the pace of the global economy itself, and I percent per year. And I think that even if your money is wildly inflation per year, people will still spend it because people want to live their lives and they want to eat food and travel the world and buy the latest iPhone. And yes, even if they know that the money is going to become a little bit more valuable year to year, they still want to experience all that life has to offer, so they'll spend anyway. Now, they'll probably spend a bit less than they do today, especially on useless things, but many would argue that it's probably a good thing.
Yeah, we'll see. I think we're still super early, and I'm curious to see how it plays out over the next like 5 to 10 years. I mean, like what happened in the last 3 years was completely unexpected for a lot of us, especially people who've been in this space for a long time. For it to go all the way up to like 20K and now where it is, and then we'll see where it takes us. But I think like fundamentally, I do share some of your own views on the fact that like Bitcoin, I think Bitcoin has figured out its narrative, which is that it's trying to be a sound money. And for that narrative to play out, it does do the right things in terms of keeping its governance very conservative, um, and keeping the protocol changes to a minimal. So that part I completely agree with. I think the thing that a lot of people are still trying to figure out is that the dominant, is that the only thing, or can we experiment in other ways, with other smart contract platforms and try to create other technologies using this new primitive that we have. And I think that's where some of the Bitcoin maximalists versus non-maximalists might be disagreeing a little bit. But
Yeah, for sure. Yeah.
But I really
The
appreciate
thing
you.
about like
Yeah.
there's just nothing else that has built up a trust and perceived trustworthiness and reliability of Bitcoin. Even if you look at Ethereum, they're essentially building out a brand new chain right now, which is probably at least 3 years away. So that's probably not where you want to place all of your net worth into right now, obviously, because it's much more high risk. Now, something might come along that's superior to Bitcoin in every single way. And if something like that happens, I'll be the first person to invest. But right now, there's just no such thing.
Do you think when you say superior, superior in what way? Because like for something to become a store value better than Bitcoin is today, don't you think like Bitcoin has a Linde effect going for it, where it has that brand and um and mind share? How would something what do you mean by something better would have to come along if something better came along? Like what does better mean?
And so I agree with you that that Lindy effect is going to be incredibly difficult to overcome. I like to say that Bitcoin is a 10x, like, in the startup world, they always say that, oh, you need to build something that's 10x better than the existing solution. And so that's how you beat the incumbent, right? I like to say that Bitcoin is a 10x improvement over gold, but going 10x over Bitcoin again is much harder than what Bitcoin did to gold. Doing what Bitcoin did to gold, to Bitcoin itself, is more difficult.
Yeah.
And because there's no more lower hanging fruit. Bitcoin's monetary policy is already the best it can be. It's fixed. Bitcoin's security is already pretty good. It's already the highest. Now you can get something with more transactions. You can get something that's a bit more private. But really, I think like my kind of controversial view as of late is that on-chain privacy and on-chain throughput and on-chain programmability, they're really decoys and they're not really what matters. And what really matters is like security, trust, protocol developer mindshare, and just like this like religiosity and zeal that we talked about. And that would be extremely difficult to overcome. That's why I think all these VCs who are funding all these other projects, they're essentially just burning money.
Do you think in that case like Grin and Beam have a chance?
No, they absolutely have zero chance. They're not going anywhere. They will never be anything more than a gambling chip in a MongoDB database on an exchange.
That's a strong point of view. Interesting. Okay, that's probably a good place to end. I'll have to think about that one. But I really appreciate you taking the time to come on. It was interesting to hear some of your views, and I'm sure the audience enjoyed it as well. If there's any other questions, people should follow up in the Twitter thread of this live debate, and then we'll also share any questions that come up and answers there as well. And yeah, thank you for joining us.
Yeah, for sure. Thank you for having me. And I would also like to thank you for your Ethereum, or how Ethereum works write-up, which was very helpful to many of us in 2017.
You're welcome. Maybe I should do a how Bitcoin works for this year. We'll see.
Sounds good.
Cool. See you soon.